Okay guys, Saturday the 3rd of March, so let's do our day trading review for our US indexes for the trading week ahead. So what we're going to do, as always, start on the S&P 500, we'll then move on to the NASDAQ. We'll have a quick review of both markets from last week in relation to our Sunday analysis, and then we'll move on to the trading week ahead. So with the S&P last week, we had this zone at 743 down to 729, 730 as a pretty key level. We had a strong press up on Friday, and what we went over was how if the market was holding up above here coming into Monday, so there's the little Sunday candle right there, we could look at this as potential support, and we were expecting a move up toward the 2770 to 2780 area, which again, these levels were strong resistance up above. We came up, actually just broke just up above this, tested above it, and then we seen the rejection coming in. We came back down, tested at our, once again, key support level. The market bounced from that level. It touched into our resistance, started to break down, and then as we started to break down below this level, once again, we went over how if we're breaking down below it, we were expecting to move down toward the 2700 level. So we break down on Wednesday, come back up and test on Thursday, come all the way down. We don't even find any support at this level, and we crash all the way down to our 2660 area, where again we find a bullish bounce. Now from last week also, the only thing I added really with subscribers was this trend line right here. We weren't paying too much attention to it. We're just using it as a little bit of a clue because the market had tested once, tested twice, and then tested 3 times. So what we were looking for was if the market started to break down below this level, it would just give us a little bit more of a bearish bias. Started to break down. We came back up, tested that level, and then we had the very strong move down on the market. Now on Friday, really after this breakdown, although we were testing at this 58 level, the preference was really selling into the market. And something why I'm going over this is because what you can see on this market is we've put in a bullish rally, and then we've came up and tested at this resistance level. But for most of the day, this has been a bullish movement. And sometimes that happens when you're trading. Sometimes you come into the market and you have a preference and things just don't line up properly. And then all you need to do is, well, you can still, as a day trader, look for the opportunities at your support and resistance levels. However, sometimes it's best just not to trade. And that's what I do, some trading days. I don't trade every single day. I'm only looking for the high probability setups, and it's one of the main differences between someone who trades successfully and someone who just trades repeatedly, building accounts, blowing accounts, building accounts, blowing accounts. I'm only looking for trades where I'm confident I'm gonna make money, rather than trades that are just, there's a pin bar there, it's a potential support and resistance, I want to get in case I miss out on this move. Okay, so coming into next week, what are we looking at? Well, the first thing is this level at 87 to sort of the 700 level. It's the round number really. This remains a good area of resistance. We've actually had a little bit of rejection coming into the end of Friday. Nothing as yet, but what I'm looking at is we've had the swing, we've then had the second swing, which has came down, and it has created a new low. So it's not confirming a bearish movement as yet, but it's giving us a bearish sign, especially because we've also broken down below this sloping support and resistance line. So coming into next week, this is a good area to look for that potential resistance, as is the zone up above, which we want to extend now. Let me get rid of this rectangle, get rid of this right here, and we'll add it in. So 2710, 2712 up to 2722. Again, if we're pressing up into this level, it remains a good area of potential resistance. And up above, we still have that key level at 2743, 2729. All 3 of those levels. If we're pressing up, if we're testing at any of them, I'm happy to look for weakness and potential bearish continuation once again. They're all good levels of resistance. We've created that new low. We've broken down from that sloping support line. Yeah, more than happy to look for the potential bearish positions. Now, for bullish positions, where are we looking? Well, we've already given ourselves some evidence. Let's get rid of these levels. So what we had last week was a zone starting around about 2673. I'm just going to adjust it into 2 zones now, really down towards sort of 6, 6, 6. Round about right there. And then down below, we're going to add a zone to take into account the spikes down that we've had last week. So around about 2660 down to 2650. Didn't really expect the market, in all honesty, last week to find support or a lot of support at these levels, but it has put in quite a nice bounce last week. Support level, support level. If we're breaking down below this level now, so if the weakness is starting to come back in up at these levels and we see the market coming down, if we start to fail at these levels, really, I'd then be expecting another move down to at least 2640. And for me, this is a more key level of support. 2640 down toward, I mean, it's really the whole way down here, but we're going to make it into a couple of zones. Down to 2635. And we've got another one at 2627, 2628, down into 2620. So both of these zones down here, for me, this is a pretty key support now on the S&P. Markets came down, it's held at these levels. We've then tried to break. We pressed back up, we closed at the levels, and then we started to break up above. On the breaks above, we've been testing once, twice, and 3 times at this level. So it's an important level on the S&P. If we're breaking down below this level, really, I'd then expect another strong move down on the S&P toward at least 2590. Really, where the MA200 is sitting on the daily time frame. But at present, we're not looking for that move. We need to at least start failing at these levels right here, which remain key support. Up above, we've got key resistance, and key resistance. For buying, let's have a look. In all honesty, I'm a little bit less keen. It may happen this week that this market will just rally, make a very strong rally, turn back into this bullish uptrend. But the way the price action is lining up at present, I'm not so keen to buy into the market unless we're starting to get back up above really the 2755 level. So I want to be a little bit more cautious coming into this week on this market. And we have given a few bearish signs. We've got 1, 2, and 3 key resistance levels up above. If we start getting back up above this 2743 level, I would be happy to look for the bounce up into the zones up above at 2755, 2763. But at present, that's really what I'm looking at on the S&P until it starts to give more evidence. So you're always doing analysis day to day on your trading. So similar to this sloping support line, we added this in last week. It just gave us another little confluence. So if I had spotted this right here and I had been bullish on this market, let's say all the way down to 2650. If I had then spotted this last week and had added it into my daily analysis, when I started to see the breakdown on this market coming below this level, it would have given me a slight pause and a slight change in my analysis because I'm adding something in that the market is telling me. And I would still then be happy to look for the market turning a little bit more bearish and those movements down. But at present on the S&P, really key support levels are all sitting just below now for looking for those stronger bullish bounces. 1, 2, and 3 levels up above. It's 87 to 702, 712, 722, 729 to 743. They're all strong levels of resistance. And it's if we really start breaking up above here, I'd be happy to then look for bullish bounces, but only really up into 55, 755 to 763 and 770 to 780. This really should be up a little bit now, up toward 788, 790. Okay guys, that's everything for the S&P. Let's move on to the NASDAQ. Okay, so for the NASDAQ, we're just doing the exact same thing. We've still got our levels on the market that we were looking for last week with our day trading week ahead. On the Friday, we'd had this nice strong move up. And what we're really going over was this whole section of price action right here. We're looking at this now as potential support, and the market breaking up above it was giving us a further small bullish sign. And what we were going over was if we started to break up above 930, we were then expecting the move up into 970 to around 995. And what we've seen coming into the start of the week, well, it was on Monday, market pressed down, tested at one of our support and resistance levels. And we're also using this spike up as a little bit of a clue right here. It came down, it tested at the spike, it pressed up into key resistance levels that we identified using this section of structure. We then had the strong move down. The market tried to spike up again and test at these levels, didn't quite reach at the levels. Again, another strong bearish movement down. What we went over was how if we started to fail at this spike level, we could then expect the move down to this 840 section right here. We fail, we came up, you can actually see on the Thursday, we come up, we test at this as resistance, and then we have the strong move down, crashing through number of zones until we find support at our 700 to 685 level all the way down here. We've actually came down below this level, and then we've put in a very strong bullish rally again on Friday with the NASDAQ. A little bit cautious, really just watching to see how the market reacted. The preference really being looking for key resistance on the market. And we've had a very strong move up, and we've just started to test at 816 to 840 once again. So coming into next week on this market, well, the first thing is it's still testing at this level of potential support. It really hasn't broken down from this level as yet. A couple of things we want to do. The first thing is this 816 to 840 zone. We just want to adjust it now up a little bit towards sort of 855 right here. This level is a good section of resistance coming into next week right here. Up above also this 880 toward 930. It's two zones. We can actually bring this second zone up a little bit. It's sitting at 890 right now. I want it to come up toward around about really the 900. Both of these sections are good resistance to look for. Sorry, wrong one. But to look for the bears stepping in once again. And then it's really if we start getting back above this level and the market is starting to turn more bullish once again, I'd then be happy once again to look for potential support. Moves up into this higher zone at 970 toward really 995, although it came all the way up and tested at the round number 7,000. So we'll just extend it up toward that level right here. So if we start breaking up above this section, at present we've got resistance on both of these areas and resistance sitting right here. If we're breaking up above here, you know, we're coming up toward the all-time highs once again. We're looking for bullish bounces, at least up toward that level. But at present, the way we're sitting, there's nothing to say this is not. Came up, broken down, came up, started to break down with a lower touch, creating a small double top. As always, what we go over when we're doing these analysis, we're day traders. We're not interested in what's going to happen in 2 weeks' time, in a month's time. We're interested day to day. And to do that, we're looking for what the majority of big money traders are going to be looking at. And at present, there's the potential that bears are going to be looking at this as a lower second touch if we're coming up looking for the rejection at these key levels. If we start breaking back up above, then we start to turn more bullish. Now also with this zone at 855, again, if we're breaking up above there, I'd be happy to look for the bullish bounces up into this resistance level, sitting just up above at 880. Down below, let's have a look. So we've got 736 to 715, really looking at that as a little bit more minor now. We've came down twice and didn't really respect it on the daily time frame, but down below 700 to 85 remains good support. Can actually bring it down a little bit. Let's have a look. Down toward 677. Remains a good level of support. Down below there, we've got the spike down at 640. So we're going to bring this one up toward 653. We're using previous structure as our clue. And then we're taking it down to 6640. Again, it's a good level of support, but really if we are starting to fail on this market again at 715, it's very likely we're coming down to test at this lower band. So if we're failing once again here, we can look for resistance, and I'd be happy to look for the moves down to 6655. Down below there, we've got that spike up again that we're using for clues. Around about 6620, down toward 6, really the round number, 6,600, just a little bit higher, 6,605. If we're starting to break down below this level again, it's very likely we're going to come down and test at these zones. And then if we're breaking down below here, really then the NASDAQ starts looking more medium, short to medium term bearish down to at least 6,560. But potentially really then all the way back down toward 6,500. Okay guys, so that's pretty much everything for the NASDAQ going into next week. So at present we have a nice level of resistance up above, 1, 2, and 3. If I get rid of this big rectangle right here, 2 and 3. If we're breaking up above this level, I'd be happy to look for the bullish bounces. If we're then breaking up above 930, the bullish bounces back up toward the previous highs. Above those levels, we're then looking toward the all-time highs. Down below, we still have good levels of support, but really this 715 to 740 area is the main area. If we start failing down below here, we have support and support down below. But I would be expecting the move down to at least 650. Failures at 620, which again is a good level of support, would then turn the market more short to medium term bearish. Okay guys, so that's everything for this week. As always, I hope you found that helpful. Hope you all have a good trading week next week. I'm James Orr, and thank you.